Hi, everyone. This is Lynn Sautter Beal of Upstart, and welcome to the Leaders in Lending podcast. I will be joined today by Phil Goldfelder, who is the CEO of the American Fintech Council, which is the industry association at the intersection of technology and financial services. Phil has a fascinating background working in politics and banking, so I'm very excited to have him join us today and talk all things AI, regulation, and working in fintech innovation. Let's get started. All right. Hi, Phil, and welcome to the Leaders in Lending podcast.
Hey, really such a pleasure to be here.
Great. Well, I think you've got a really interesting background, and having worked in Congress, becoming a legislator yourself. Can you just tell me about your path and how you made your way through government to leading the AFC?
It's a great question, and I hope we have a couple of hours set aside for the conversation. I spent the vast majority of my career thus far in public service. I came up in New York City politics in the city council. I had a very unique privilege of working for, I would argue, probably one of the most unique mayors New York City ever had in Mike Bloomberg, and spent a number of years working in the city administration before taking a job with Senator Chuck Schumer, who is now significantly more popular across the country than he was back in 2009. But interesting time, because when I was working for the senator, it was at the same time that President Obama had taken office in the earlier part of 2009. So really unique insight into so many different things happening in the federal government. And after spending 3 years working with the senator, I actually ran for a state elected office here in New York and served in the state legislature for 5 years. And sort of the challenge with public service is there's sort of the question is whether, for me, there's a political movement, right? As things evolve, as people come into office, leave office, there's opportunities to sort of move around. And I was very lucky in sort of my time from the city council to the mayor, working for the senator. And the question for me after running for office was, what's next, right? Do we stay in public service? I will say that I loved every moment that I had in service, in serving my community and serving the greater public. I mean, the challenge is it takes its toll on your family, on your life, and on so many other things. And so the question was, what was next for me? The opportunity presented itself to work at a fintech focused bank, a bank called Cross River. And I thought long and hard about what the next step was going to be. Now, during my time in office, I represented neighborhoods that were devastated during Hurricane Sandy. So Southern Queens, Rockaway, our community is about a year into my first term, were devastated during the hurricane. And I learned very quickly the challenges, not just of the insurance industry, but also of the banking industry. And the next 4 years that I spent in office were steeped in legislation, regulation, specifically related to financial services, as many people who I represented were struggling to get access to financial services because all of our bank branches were destroyed during the hurricane. How do you get your insurance check signed by your bank, right? There were so many issues that arose during the hurricane. And when the opportunity presented itself to work at Cross River, sort of the idea of, what is next and what can I sort of continue, where can I go in private industry that sort of will lend to my continuation of public service? And Cross River was exactly that answer, right? As far as my thought was very simply that as I continue my path in public service and trying to find ways to help folks, fintech seemed like the real natural answer. And so the work that I did at Cross River over 6 years sort of led to the continuation of the public service and finding ways to make financial services more accessible to families who have been unfortunately left out of the traditional financial services industry. After 6 years at Cross River, it's sort of the question was, how can I do more, right? How can I sort of make even a larger impact? And being here at the American Fintech Council enables me not just to represent one company, but to speak on behalf of 75 or 80 companies who are all focused singularly on creating access to financial services. So it's sort of a long road, but I'm really excited to be here and continuing my work.
Sure. Now it's interesting you mentioned Hurricane Sandy. So prior to joining Upstart, I worked for a major bank that is also headquartered in New York, and one of the downtown buildings was unavailable for several years, and I think people took their laptops home thinking they'd be able to get back in, and in some cases did not even take them home. And due to the water damage, that building was not operational for several years. So I can only imagine from a consumer level of people who live in those areas, how impactful that was on even just accessing really any sort of basic service. So you've described the American Fintech Council as a collection of responsible innovators. What does that mean to you?
So that's a great question, and I'd say that Upstart's the perfect example, right? When you think about innovation, right, it's not just innovation for innovation's sake, for the purpose of building your business. When we think about members of the American Fintech Council, these are responsible innovators who are looking to create access to financial services and utilize innovation, but do it in a responsible way. And so I often talk about the American Fintech Council. I say that we're probably one of the only standards-based trade associations in that regulatory best foot forward first. And so the goal is not just, come one, come all for fintech innovators. It's really about your commitment to standards. And I think about, again, sort of one of our founding members is Upstart, as you know, and the idea of using alternative data or AI underwriting and decisioning is something that Upstart was a pioneer in many, many years ago. But it wasn't just let's, sort of open up this new innovation and see what happens. It was carefully thought out and slowly rolled out and sort of walked through the challenges, the issues, and worked it through to a point where when we're offering a product, we can ensure that we are not compromising on consumer safety in any way, shape, or form. And so we're essentially creating the access to financial services without compromising on any regulatory compliance. And that's kind of what the American Fintech Council is. Today, we're just shy of 80 members who are changing the future of finance, but doing it with a focus on standards and on compliance. And that's the way you want it to be, right? I mean, when you think about when you think about traditional financial services, I joke about this all the time. We see the big pillars outside of traditional old school banks. And there was a reason for that. It was whether it was marketing or whatever the sort of wherever it came about, the idea of showing stable pillars in front of a bank assured consumers that this was a tough structure, right? My money is going to be safe when I put it in. And I believe that AFC members are creating the exact same thing in the fintech world and innovative world by creating a strong set of standards. And so that consumers know when they engage with AFC members like Upstart, you're getting the exact same protections and regulatory sort of guardrails that you would get in traditional financial institutions. And the difference is fintech is meeting consumers where they are. And that's sort of the evolution of whereas traditional banks have exited most communities, that's kind of where, new innovative responsible fintech companies have stepped in to fill that gap, and they've done it remarkably well.
Well, I can certainly say as a guest at the policy summit last fall, fairness, access to services, fair lending, and all of the really risk and regulatory concerns were a big focus of the attendees there. So, certainly an interesting time, generative AI making waves, bank failures last year, which I don't think any of us had on our bingo card, and really everyone wanting to get into the business of regulating how these new products and tools are used. And I think is certainly your background as a state legislator, lending regulation has always been on the radar of states, but I think we're seeing more state legislatures kind of increasing their focus on things like fees, interest rates, other consumer protections, and passing legislation that impacts how banks can either import or export rates. So how do you see this impacting fintechs and banks who offer products and services that span the entire country?
So it's a great question. I think there's a sort of a lot of different directions. Number one, first and foremost, in the absence of federal guidance, structure, rules, and regulation, you find that a lot of states tend to step in to try and fill that void. That sounds good on its face, and I say that as a former member of a legislature. I mean, there's a number of bills in my background that these are bills and laws that I was able to author and ultimately pass. But every one of them was meant to solve a problem, and that's what you're seeing today as it relates to fintech, right? Solving problems on the state level in the absence of federal regulatory structure. Now, again, it seems great on the surface, right? That's what we want. As I mentioned earlier, AFC believes in regulatory structure. The challenge that we have is not in the regulatory structure. The challenge that we have is a patchwork of regulatory structures, and that every state operates independently. And I can tell you that laws that I passed here in New York were very, very different than the laws and the structures that were passed in New Jersey and in Connecticut and in California and in states all across the country. And so, in theory, we're all doing the best we can to protect our constituents. But what I want people to think about is, how are companies having to operate within that regulatory structure? And so, as a company that is nationally based, right, that is serving consumers from California to Maine and everywhere in between, the idea that they have to look at a patchwork of state regulatory structures and systems, interest rates, how they monitor and judge bank fintech partnerships, how they think about so many of the different things that innovative fintechs have to deal with. Now, all of a sudden, while it was done with the best of intentions, laws were passed with the best of intentions, you're actually doing the opposite of what you're intended to do. And what I mean by that is, every state steps in and says, it's our job and it's our responsibility to serve and protect our consumers. But when you're doing that, you're inherently actually making it more difficult for innovative, responsible companies to operate. And so what happens is companies say, forget it, it's too complicated to operate in this state or in that state. And so we're actually going to take our hands off and not offer our services in those states anymore. And so think about what you're actually doing. You're taking away access to financial services in the name of protecting consumers. And I'll give you a perfect example of that. Last April in the state of Colorado, they made a pretty significant change to state banking regulations, and I don't want to bore the audience with the nuances and the details, but ultimately that law, if it is to take effect in this coming July of 24, most responsible, innovative online lenders will exit the state of Colorado. And so, in the interest of consumer protection, the legislature passed this law. But ultimately, what's going to happen is that it's going to significantly decrease access to credit and responsible options for Colorado families. And so I think two things. Number one is I bring my unique experience to try and work with state legislators all across the country as it relates to online lending, bank fintech partnerships, innovative products like earned wage access or buy now, pay later. As we talked about, as you mentioned, AI, alternative data and underwriting. And so we try to sort of take what all of our companies are offering and work with state legislators to make them understand kind of the nuances of the various product offerings, and make sure that they recognize sort of the unintended consequences. I used to say this all the time. When we were in Albany, in New York, every single year, and you pick a subject, but every single year, we would pass historic legislative reforms every year. And when you think about that, you can't have historic legislative reforms every year in the same subject matter. You just can't.
That's true. It's not historic if it happens annually. So
Exactly.
it's just annual changes.
Exactly right. And yet every legislator will say this is historic changes for education reform, for this reform, for that reform. And unfortunately, again, in the interest of, again, what I call reactionary legislating, you sometimes in your drive to create that reform, you don't necessarily recognize the unintended consequences. I think, as you know well, Upstart is doing things, is in uncharted territory, right? We're doing things today in financial services that I was about to say 15 years ago, 2 years ago, we would never have imagined. And you see what's happening with AI today, right? Like, no one would have imagined it. And thankfully, you're seeing the federal government act. The Senate created a working group. The House just announced a working group, right? You're seeing that action, but it's slow on the federal level. And so at the same time, we're seeing federal action, you're now seeing state actions. And so that, while usually I feel good, like I said, as a standards-based organization, we love to see regulatory engagement. At the same time, we want it to be responsible and we want it to be thoughtful. And we want regulators, attorneys general, state legislators who are going to respond, understand what we're trying to do, understand the process before they implement historic change. And that's kind of what we try to do, and some of the challenges we face day in and day out. And I'll just end with one thing. We have, again, companies like Upstart who sort of spend a lot of time educating, right? I mean, Upstart worked with the CFPB and worked with other federal regulators before it was cool to do it, right? Before all the cool kids wanted to do it, Upstart was sort of on the front lines of that. Federal regulators also need to do a good job of engaging, right? It's not just about the innovator's job to engage with regulators. And one of the big themes for AFC is regulatory modernization. The regulatory structures need to evolve at the same pace as the innovators. And unfortunately, today, we're just not seeing that.
Sure. And I think we certainly work with many banks of various sizes. We work with many credit unions. And so that kind of patchwork of legislation, whether it's their federal prudential regulators, the NCUA, the FDIC, or we're talking about maybe state financial services organizations that don't have a lot of expertise in this area. How are they really evaluating the business that those lenders are doing with us as it relates to looking at our pricing and our models and really how we make decisions. So it obviously has been in the news a lot recently that the FDIC has made some changes as it relates to their innovation and tech offices. And I know that you and the team work closely both with the regulators and the House Financial Services Committee on efforts to improve access to fair financial services. Can you talk about what changes the FDIC has recently made and some of the statements that the various members of the House made that they're actually moving innovation backwards with those changes?
Yeah, that's a great question. As I mentioned, in the absence of federal regulatory structure, states tend to step in. That doesn't limit our work at the federal level as well. And sort of as I mentioned earlier, it's just as important for the regulators to commit to working with fintech companies as it is for the fintech companies to commit to working with the regulators. And so, as I've mentioned, all AFC members are standards based and are fully committed to regulatory best practice. But that only works when you're getting clear guidance from the regulators, right? Unfortunately, a lot of agencies have really stepped in to try and solve for that, I think, sort of chasm, right? They've tried to bridge the gap. And you've seen the Fed, the Federal Reserve, come out with what they call the Novel Activity Supervisory Program, right? Which is great, right? It's sort of the concept is we're going to sort of really steep ourselves in some of the banks that are offering BaaS programs, BaaS work, innovative programs, who are doing innovative partnerships, so we can learn the systems, we can understand what they're doing, we can understand the way in which they're engaging with the financial services ecosystem, so we can actually best regulate them, right? And that's what we want. I think that's what the fintech companies want, that's what the innovative banks want, and that's what the regulators want. We saw the same thing at the OCC and their Office of Innovation. Tremendous credit to the team there. I would argue probably the OCC was probably way ahead of the pack many, many years ago. I remember my earliest days at Cross River going back to 2016, 2017. You had, we were taking meetings with people at the OCC about some of the work we were doing and some of the innovation. The FDIC about 3 years ago, maybe 4, created what they call the FDI Tech Office, which again was essentially the same concept, which is we're going to engage with fintech. None of these innovation offices created a free pass for anybody. I want to be very clear about that, because oftentimes there's this confusion that, it was a free pass for companies doing what they wanted to do. It's quite the opposite. It was really, it was a tool for everybody to learn about the other side. Meaning, again, I think about a company like Upstart that engages, right? This was a great opportunity, an open door where we can go meet with the OCC. There is an office and an entity within the OCC or within the Fed or within the FDIC or within Treasury where we can go and have an honest, whether off the record, on the record, but it was an honest conversation about what you're doing, how you're doing it, how you think about regulatory structure.
Well,
Yeah.
I think there's a good kind of upstart origin story early on that I'm sure you've heard Jeff and others tell, where as the company was being founded and this idea to start working with more banks outside of kind of a primary sponsor bank, they just walked into the office in San Francisco and introduced themselves and wanted to have a conversation and a little bit maybe early for that at the regulators, but certainly the idea.
Yeah, and that, I mean, again, it sort of talks about the forward leaning in terms of fintech companies that are not hiding behind sort of some shroud
Mhm.
of, sort of algorithms, right? Like obviously they're innovating, but they're eager. I say they're aggressive in their transparency, right? Like
Sure.
they're putting their story out, their ideas out long before the regulators are coming in. Unfortunately, the FDIC over the last couple of years has really withdrawn from that, in that they've turned off the spigot. In that they're not taking those meetings. They're not the FBI tech office, which showed so much promise about engagement and understanding what's happening with regulated banking institutions. They basically shut it down. And what we're seeing, the what's happening because of that, is that no one understands what the rules of the road are, right? Innovative companies who want to be responsible don't understand or appreciate what sort of what they need to do or how they need to do it. And so when you think about newcomers to this ecosystem, how they're learning about it is they're learning about it by looking how other banks were punished, right? It's what we call regulation by enforcement, right? And so all of a sudden the FDIC says, well, we're gonna raise enforcements because we don't like the way this bank ran X, Y, or Z program. They didn't communicate with that bank before they got in trouble. The nature of the engagement didn't exist with the financial institutions before they got in trouble. The bank found out after the fact. And so now, how do other banks learn about the process or what they should do? They look sort of where the other guys went wrong, or where at least publicly they went wrong, and they try to do it that way and work that way. It's not the way, regulation should work, right? When you
Sure.
mix pragmatic regulators with responsible innovators, you can actually create a system that is going to serve consumers, create the access to financial services without compromising on consumer protection. But that requires a pragmatic, forward thinking, engaging regulator. And unfortunately, recently from the FDIC, we're just not seeing that. And so we've offered, sort of our services at the American Fintech Council in sort of trying to convene that, what we'd like to think is either a working group or some sort of listening session, where I think sometimes, you need the opportunity for reasonable people on either side of the table to converse with each other, yell at each other, engage with each other. Meaning, if we're doing it wrong, if responsible, innovative companies are doing it wrong, tell us, right? The beauty of a responsible, innovative bank is they understand regulatory structures, right? Banks inherently are charged with protecting the integrity of the financial institution. As we learned just a year ago, right? Sometimes the regulators are just not keeping pace. And unfortunately, we see the consequences of that. And so you would think that regulators would have learned from some of those mistakes and said, let's lean in and learn what banks are doing, how they're doing it, so we better understand it. And I credit where credit is due, because I'll say this about the CFPB and about the Federal Reserve and the OCC. Sadly, we're not seeing that at every agency, and we're hoping that they're going to engage.
Sure, sure. And I think your point earlier about sometimes that regulation has the best of intentions, but then consequences on consumers who cannot access traditional financial services, and then also see limited kind of novel financial services they can access. I know there's been a lot of conversation about the sponsor banks or banking as a service and additional focus from the regulators, but not really a lot of clear guidance about what that means and where they fit within the overall structure, and then where the fintechs fit. So, what are your thoughts about how a banking as a service or sponsor bank can navigate in this really uncertain period with what the rules are for their businesses?
So that's a great question, and also sort of a key differentiator for the American Fintech Council, because I speak a lot about our standards-based, us being a standards-based trade association. We're also one of the very few organizations, if not the only trade association, that counts innovative fintech companies as members, but also the leading BaaS banks across the country. So in addition to Upstart and all of our fintech partners, we also count, Cross River and Customers and Coastal and so many other leading BaaS banks as our members. And the beauty of that is that it creates a very wide shared ecosystem of information about best practice, about sort of rules of the road, about the best ways to think about third-party risk management, and hopefully create kind of, in the absence of federal rules or regulatory rules of the road from regulators, it creates rules of the road for, industry participants. And so it's that diverse membership that enables us to create the standards that we think ultimately will best serve consumers. And I think, sadly, every single day we're learning more, mostly by, because we're the enforcements are starting to come more and more. And it's unfortunate. It's unfortunate because there's so many industry participants who, we say this as members of the American Fintech Council. We never say that no one's ever going to not, we're not saying we're never going to get in trouble, right? Or someone's not going to make a mistake. No one is perfect. I want to be very clear about that. No fintech, I don't care how responsible and how great you are, no one is perfect, and you're going to make mistakes. That's not wrong. Look, I have 3 kids at home, right? Like, we expect them to spill milk on the floor, right? I'm not going to forever prohibit them from drinking milk again, right? Like that.
As long as you just don't want them to intentionally spill milk on the floor. If they accidentally spill it, is different than opening the fridge. And I also have 3 kids, so although only one lives at home now, 2 are out.
Good for you. No, mine are still little. But mine are still very, very little. And so, but that happens, right? You open the fridge and the milk spills, right? We don't prohibit them from drinking milk again. Now, what you said is exactly right. If they took the milk out of the fridge and just because they were in a bad mood and they spilled it on the floor, right? Like, then there's a different level of consequence to that. I would use that same analogy here, right? And this is quite the opposite. We're talking about sort of fully matured companies, right? Upstart is not they're in emerging industries, but this is a company that's been around for a bit, right? And who has dedicated a significant amount of resources to compliance. I'd be remiss if I didn't talk about my partner in this is Nat Hoops, who runs your public policy office, who it probably works harder than we do in terms of engagement. That level of engagement should be rewarded, not with a free pass. That level of engagement should be rewarded with engagement in return. Right. And when you think about what I'm saying, that's not asking for very much, right? I'm not asking for anything more than tell me what I need to be doing, or how I should be thinking about it, or how I should be thinking about my innovation. Same thing you do with your kids when the milk spills, right? You help them clean it up, right? You fix up the problem, and then you talk to them. We have to be a bit more careful when you open the fridge that, you have to make sure that nothing is leaning on the edge. That creates, a future for everybody, right? Unfortunately, again, and I hate to be negative so much, right? I think though the challenge is that, there's this, what I talked about earlier, reactionary legislating, right? Instead of further engagement post the Silicon Valley debacle from regulators, I think they're reactionary legislating, right? Or regulating in that, like, oh my gosh, we have to stop everything because we don't want to get caught with our pants down like we did the first time. And that's just the wrong approach, because it goes back to what I said earlier. The perfect way to tie it all together is, in the interest of protecting consumers, you're actually hurting consumers because you're removing reasonable, responsible financial options from the table. And when you think about the partners of Upstart, right? The banks that you're helping, the credit unions that you're helping, not just, you think about your partners, and it's easy to forget that those partners are servicing thousands of consumers in a reasonable, responsible, affordable way. All of a sudden, you call into question some of the practices, and you're pulling that, sort of that sheet out from under that consumer, and you're taking it off. So where does that consumer go, right? When you remove responsible options, and I talked for a moment earlier about Colorado, responsible actors are going to comply, meaning responsible actors who are, as I said, all of our AFC members who are looking for always for the regulatory gold standard. If the law changes and it prohibits them from operating, they will walk away from any state, right? They'll stop operating because the state laws have made it more difficult. You know who's not going to stop operating? The nefarious actors, right? Like those folks who are looking to skirt the rules to take advantage of consumers. We talked about Hurricane Sandy before. There was a lot of nefarious actors who came to my neighborhood and to all neighborhoods impacted who look to take advantage of consumers at their worst.
I would say the Paycheck Protection Program, very similar, great idea, best of intentions, but the execution of it led to a significant amount of fraud. And the expanded unemployment benefits, same thing, a lot of fraudulent actors who saw opportunity in a very bad situation for the country.
Yeah, and so it comes back to, and I talk about this a lot, not all fintech is created equal, right? Like, AFC members are responsible innovators who are doing the best they can to follow regulatory structure to provide that consumer access. And then there's a whole other segment of fintech companies who are not. Here's the challenge. You change the law and the responsible companies will walk away, right? The responsible companies say, look, it's too hard for me to offer my products in that state or in that way. The nefarious actors will still be there. And so I think about Colorado and I say, okay, all the good, responsible bank fintech partnerships and online lenders are going to walk away. Who's left? The payday lenders, the triple digit lenders, those people who will, and where does, think about the consumer who was utilizing an Upstart product literally has nowhere to go. Upstart, sort of walks away from a state like Colorado or any state, using that as an example. That consumer has nowhere else to go. And so he goes to the pawn shop, right? And he goes to the payday lender. And so now, in the interest of reactionary legislating, who did we actually protect, right? And I say this as someone who spent an entire career on the public service side, right? I worked in the U.S. Senate. I worked in the state legislature. I served. And by the way, I'll say this about myself. I'll be the first to admit it. I made mistakes in the legislature where I passed laws and realized, you know what, I may have done more damage, and we went back to fix it and figure out what the unintended consequences are. If we can, the American Fintech Council is trying to prevent that before it happens. But we do that by educating and by speaking a lot about the nuances of responsible innovation versus non-responsible innovation. And I think that's a big part of what we do for the ecosystem.
Absolutely. So, one of the things we've done over really the past year and a half and put an extensive focus on is what we call our regulatory readiness for our bank partners and credit union partners. And so my team worked with our risk and compliance partners internally, worked with Nat Hoops, of course, on the work that he's been doing with the OCC and the MDI various programs that he works with. And we're really outlining kind of best practices for our lenders of how to oversee a third party in a fintech, how to build your oversight program, how to document your diligence, how to make sure that you have the tools to really understand how you're partnering with us so that when you do get into that regulatory exam, you're equipped to support it. And I think we're definitely seeing from a variety of regulators that the questions vary of what they want to know, and certainly their expertise in understanding and evaluating a fintech relationship. Are you seeing anything from the other fintech members of the AFC where they're feeling similar to us, that we feel like we have a responsibility to help our banks and credit unions support themselves through regulatory exams?
Yeah, we talk about that a lot as sort of one of the value propositions for being a part of the AFC. So two things. Number one, as I've mentioned a number of times, and I say it a lot, right, is our commitment to regulatory best practice and standards based. But I think what we do is we try to use the network effect and the shared ecosystem to best educate each other and the wider world about the best ways to do it. Now, I'll start with our bank membership. Our bank membership sort of is comprised of some of the biggest banks in the fintech ecosystem, who have, sort of large asset sizes, right, north of 20 billion in assets. We also have bank members who are in the BaaS space who are less than 100 million in assets, right? And when you think about that, you say, well, how is it possible that a trade association is servicing and answering the needs of the biggest banks and the smallest, right? And the answer is that they're both helping each other, right? Like that, the value prop is that they're both together. Why? Because the biggest banks get to understand some of the newer questions from the smaller banks and the way the smaller banks are thinking about things. Because sometimes, when you're, look, I say this about different, me and my brothers, right? Like you have different levels of when you reach a certain age, you think about the world a different way. And sometimes the younger perspective is helpful, even though you're older, right? And so same thing with banks in that the younger, the smaller banks, the more nascent in terms of their engagement in the BaaS and the fintech ecosystem provides additional clarity where the bigger banks sometimes they're like, oh, they don't think about these things anymore because they're so long past it. I think it kind of keeps them humble and sort of asking those questions and in that conversation. On the flip side, the smaller banks get to learn from the bigger banks, right? And so we've really created a shared ecosystem that works, and most importantly, they're sharing their compliance know-how and what that standard looks like. And so, as an example of that, as soon as there was in June of 23, there was a joint guidance from the regulators about third-party risk oversight, and immediately we brought all of our members together to think about, okay, what does that mean, and how does that change what we do, and not just in a macro sense. We had general counsels like, hey, are you changing up your contracts based on that? Like, how are you looking at the nature of the partnerships? Like, what needs to change and how do we need to change it? And so that's how we think about it on the bank side. As I talked a bit earlier about how putting the banks and the fintech companies in the same ecosystem inherently creates kind of like sort of who is doing what in the nature of that relationship and helping everybody get better. And then the fintech companies, right? And similar to the banks, the smallest companies, right? Those who have not even raised money to those who are in Series C or D, right? Like those who are larger. And I run the gamut of those companies who literally are, whether it's part of our working groups where we're talking about a specific issue. And so we have working groups related to, bank fintech partnerships, to data privacy, to open banking and things of that nature, where you're finding everybody come together to think through some of the challenges they're facing, to vocalize some of the challenges they're facing, and work together. Again, you have to remember, we're still competitors on some level, right? I mean,
Sure.
we're still in a capitalist society where folks are trying to build successful businesses. But I think they recognize that in the AFC ecosystem, there's a natural benefit. We're all, as they say, a rising tide raises all ships. And I think, Upstart's a perfect example of that, is that we're going to commit ourselves, our time and our resources, whether it's, financially or with the expertise of a guy like Nat Hoops. Again, the expertise is just as important, right? Your sweat equity is just as important as the real equity. And so sort of building those shared ecosystems, enables everybody to understand the challenges and then solve them long before they're challenges for them. And like I said, there's this pay it forward where we're continuously building out this ecosystem. I say this a lot. We're not just the biggest sort of fintech, trade association. We're probably the fastest growing because folks see that we're doing it I joke about this a lot, in a warm and fuzzy way, right? Like where, we try to bring to our trade a mechanism of comfort, right? Similar to the way we talk about traditional banks, right? There's a level of comfort that we could talk about innovation. We could talk about things like AI. We could talk about things like data sharing, but in a non-threatening, non-competitive way, so we can actually all walk away with best practice and then go change the future of finance.
Sure. And I definitely think some of the points you made about the team, the different companies working together and what the smaller organizations can learn from the bigger, more mature ones. And certainly it is a resource challenge, I think, for many of those smaller organizations, whether they're a community bank or a smaller credit union, or whether they're a startup fintech entering the space, the cost burden of having enough risk and compliance professionals that can effectively navigate all of the things that are changing is pretty large, and I think definitely gives an advantage in some ways to the bigger players that can hire and pay for all of the talent to do those things. So we use the interagency guidance as a part of the guidebook to our regulatory playbook to work with our partners to help them understand that and where we can lean in with our resources. Certainly last year, the executive order on AI came out as well, and it feels like there's just a proliferation of orders and guidance and statements made by a variety of organizations. But there was some thought that was potentially, in the way that it was written, was also maybe opening the door for the CFPB to more directly oversee non-bank fintech companies. What are your thoughts on there? I think the AFC, of course, as you said, is standards-based and really almost like a self-regulatory organization like a FINRA or similar. But what are your thoughts about the future if you had to look out 5-10 years? Do you think that there is a world where certainly there are state exams already, there are FTC and other audits and exams of fintechs, but more kind of direct regulation from the national regulators?
So it's a great question. What I'll say is that, and I'll go as far as 5 years. In 5 years, it's not going to be a question of banks and fintechs. Fintech is going to be banking, meaning the concept that there is this divide or differentiation is the lines are quickly getting blurred, and not in a bad way, right? Somebody will hear that and say like, oh, you're blurring the lines. No, quite the opposite. Responsible fintech companies are embracing the regulatory structure, meaning everything you just talked about in terms of Upstart is educating the banks on third-party risk management. And think about what you're creating to the larger ecosystem. Every time that bank now partners with another company or talks to another bank, they're using kind of that model to sort of pass it on, right? And creating a wider ecosystem. Mm-hmm. In 5 years from now, we're not going to call it fintech. We're just going to call it banking. And those people and those entities who embrace the regulatory structure today will be the ones who are offering the services in 5 years. And I could not say that any more emphatically, in that it's sort of like, it's always hard to turn a battleship, right? And so the idea that you do it organically and slowly and you sort of evolve over time sort of makes for a much stronger foundation. And I think that's where companies like Upstart come in, and all of AFC members, where we're building a strong foundation built on the structure of regulatory compliance, so that in 5 years, we talk about who is going to be the trusted entities. It's going to be the Upstarts of the world who are going to be poised to, sort of displace kind of some of those traditional banks who have basically abandoned communities all across the country because they can't be bothered with it. Whereas think about what your business model is. Your business model is, I'm going to lean into the credit unions. I'm going to lean into the community banks, and the community banks that are able to embrace that, accept it, and provide those services are the ones that are going to survive along with you to create the future financial services. And so I think, again, everything I say about fintech, as I've mentioned, needs to be the same on the government side. And huge credit to the Biden administration. So I think the executive order kind of laid out very, sometimes they're lofty goals, right? But let's shoot for the moon and hope to get to a couple of stars, right? And I think that's kind of where we're going. Tremendous credit. Oftentimes government tends to lag behind industry. I think government today is recognizing the challenges of AI, not just in financial services, obviously, but in multiple ways across the world and across society. And so I think financial services is just one aspect of that. And you're seeing more and more government agencies engaged to try and understand it. There was recently an announcement from the White House that Elizabeth Kelly, who is a senior advisor at the NEC, is going to lead a new program, specifically focused on AI and regulatory structures. And I think that, there is a significant more of learning to do as relates specifically to AI. But like I said, it's the folks who embrace it early, right? unfortunately, you're going to find, and Len, you see it every single day, there are going to be companies who are going to put their head in the sand, right? Like, we don't know from it. We don't want to hear from it. And by the way, there'll be regulatory agencies that will do the same thing. We don't want it. We don't need it. It doesn't help. It doesn't. Ultimately, it doesn't work to put your head in the sand if you're an agency and you're a regulator. It doesn't work to put your head in the sand if you're sort of a company, a fintech company, or an innovative company. If you engage responsibly, organically, and slowly, you're able to implement certain things. And again, Upstart's just a great example of that, where I would argue like AI is not something that is new to Upstart, right? The concept of alternative data and how do we sort of reach more and more consumers who have been traditionally left out is not new to Upstart and to your partners. But I would argue to thousands of community banks across the country, they're still putting their head in the sand, right? They don't want to hear from it. They don't want to know from it. They want to do it the same way they did it 60 years ago. They want to do it today. In the interest, think about this, in the interest of, well, because we don't want to hurt the system or upset the system. So who loses? The consumers lose, right? Because you're basically denying them their right to get bank accounts, to get access to credit, to get access to financial services. And so responsible innovation breeds access, bridges the gap, democratizes financial services, and really is preparing us for the next stages. And I think burying your head in the sand, whether you're government or whether your fintech company, is just the wrong move.
Well, great. Well, I think that's a fantastic one to end on. I was going to maybe ask about any other hot takes, but I think that one is a great way to close it out. So, Phil, very much appreciate you being on the show today. Glad to have you here. Great insights as usual. Glad to see you're on location. I know you move around a lot and traverse the country in many states, talking to AFC members and to regulators and various groups. So appreciate you taking the time for this, and looking forward to this episode getting out there.
Yeah, no, thank you. And more importantly, not just for today, but for all the work that Upstart does and their dedication to not just, again, not just growing their business, but to growing the entire ecosystem and lending their expertise and their capital to that. So tremendous congrats and thank you to you and to the entire Upstart team.